All right, today's Friday, March 7th. It's 3:51. I'm looking to put on a calendar on the IWM. Looks like the market's under pressure here. We've got support over here at about 117.22, currently trading at 119.41. And so I want to put on a calendar where I'm looking to go ahead and I'm looking to sell a calendar, and so I'm just going to put a couple of bucks at risk. I want to go ahead and just see, is the market going to wake up through the weekend, plus or minus. I'm looking to sell 6 of the 118 calls in the weekly, the March 2 weeklies, 118s. And I'm looking to buy the 118s a few weeks further out. And so it looks as if the cost of the trade should be roughly 296 minus 201. So we go out to April. There we go. So right around 95 cents. And that's about right. So let's go ahead, we'll put that on, confirm. I'm going to buy a calendar. So I'm buying the Aprils, I'm selling the 6, and it's going to be an excursion of about $588. So we'll go ahead and we'll send that in, and it's filled. So we'll go ahead and we'll see how that works with the market over the weekend. Let's just take a look here. Yeah, it was trading between 91 and 95 cents. So I went ahead and I paid 95. You can see some bids at $1, some bids are at 98 cents. So I'm fine with that. So Jerry Furst with Traders Education Network, once again, looking at the Russell 2000 as the news out there is looking a little bit on the bearish side as far as if you take a look at the headlines. I even go to the New York Times. We got Russia in the headlines. Job gains are likely to pull off anxiety after dismal 2 months. Then we've got here on the Financial Times, you're got all of this talk about Crimea and Ukraine. Then you've also got on Market Watch, 7 signs we're near a market top. So not that these headlines are indicative as much as the fact that there's just so much saber rattling right now, and we are at market tops. So that's why I've gone ahead and what I've done is sold in the near term 6 of the 118 calls for $2, and I bought 6 of the 118 calls out into April for $2.96. Cost me 96 cents to put on the trade. The risk-reward graph looks like this. And remember, you can go to traderseducationnetwork.com to keep up with this and the other trades that we've got on. And so I'm looking out 1 week from now. Today's currently, again, March 7th. 2014. And so I'm going out 1 week from now saying that we might go ahead and come down to about 117.30 or so. And so by putting about $600 at risk, I'm looking to pull in about $225, which is, not a bad return. That's about 37% return for the excursion. And once I put on a trade like this by selling the 118 calls with only 7 days left, I'll get a little bit of time decay, but also notice that by buying 6 of the 118 calls with 29 days, I'll then be able to start to trade around this, because notice I'm $1.50 of intrinsic value in the money. And so we'll be able to modify, adjust, and hedge around the index. Currently, other trades that we have that you can look at the traderseducationnetwork.com website, we have several other positions currently in Safeway, buyout opportunities or pushing the stock around. Price line, we've got a vertical spread. We have GNC. We have some other stocks. What do we got? Abercrombie and Fitch. Go ahead and take a look at traderseducationnetwork.com. Click on the Trade Log tab, and you can look at these videos, or click on the search button on the website by symbol, and you should be able to see all of the trades just for that one specific symbol. Jerry Furst, traderseducationnetwork.com. Over and out.